Alright guys, so welcome to the first day of this 30 days October YouTube mentorship. I'm really excited to have you guys in this particular series, and this series is going to be for 30 days like the topic implies, and we will be going into a lot of topics, right? With the increasing rate of the dollar in Nigeria, we really need to know what you're doing because now things are more expensive and all of that, right? So I said, okay, throughout the month of October, from the 2nd to the 31st of October, we'll be having a YouTube mentorship, right? So this call is designed to help new traders to get accustomed to how the market operates. It's also there to help traders that are already with some experience or with some level of experience to actually hone their skill and improve, right? So we're going to really have this free class. It's free of charge. Of course, you know this on YouTube. It's going to be holding from now till the last day of October. All right. So the best, since this class is free of charge, it's going to take a lot of my time. I'm the one that's investing my time. I'm not investing my resources into putting all this together for you guys. So the best thing you can do is to share this series with your friends. Share the link. Just as all you're doing. You're not paying anything. All I just require to do is to share so other people can also benefit from this 30 days bootcamp, right? So we're grouping everything into a different folder or a different playlist so you can actually have easy access. So every day by 8 p.m. starting from today to the last day, we're going to be having a, a new lecture, a market review, just a session every day from the 2nd to the 30th of October 2023. All right, so I wish you guys the best of the learning experience. Do how to get a note. If you don't have a note now, just pause this video and get a notepad, right? So something like a note where you can write down points and all of that, right? So this first teaching is going to be talking about connecting the dots in market structure, right? When it comes to market structure, many traders tend to think that just because they know that the market should make a higher high and a higher low, then it is bullish, right? And if the market is making a lower high and a lower low, then the market is bearish. This is what many guys believe that this is all market structure is all about, right? But I want to connect the dots. But I'm not here to talk about market structure from the beginning to the end, right? This is just a bootcamp to upgrade what you already know and to give you clarity, right? So now I want to point out something. Now, when we are talking about market structure, there are various rules we use, right? And this is where the notepad will come in handy because you need to write down these points, right? So now, when we are in a bearish trend, market tends to look like this, right? And this is how the market actually looks like, right? Right there, something like this. Right, this is how a bearish market actually looks like, right? Now, once you guys understand something, that's why I do it this way, right? Right. Unlike the conventional thing, they say that market should be perfectly lower high, lower low, lower high, lower low. That is not how the market books, right? This is not how the market books. This is totally wrong. If you open your chart, you can't see the market trending perfectly like this. It tends to look like this, especially in the lower time frame, like 30 minutes chart, a 1 hour chart, and all of that. Even the daily time frame sometimes looks like this, right? So now you have to be able to understand market structure from there. We are here to connect the dots. What are the things that we are not really putting together, right, when it comes to market structure, right? So the first thing you have to understand is that the market does not give a perfect lower high and lower low, right? The market does not give a perfect lower high and lower low. So you have to write it down in your notepad. The market does not give a perfect lower high and a perfect lower low, right? It doesn't happen. Remember that the only thing that is required of you in this particular bootcamp or 30-day session is that you simply get a notepad where you can jot down the points or you share the link with your friends. So just simply get a notepad and then share the link with your friends. Anybody that you know that is interested in forex trading, just share the link so I can be able to learn from this free exercise. It's free of charge. Nobody charging you anything. All you have to do is just share the link. That is all. All right. So now, when the market is bearish, since now when the market is looking like this, how do that classify our lower high and lower low? Right now, I will not be writing things down. I will not be saying it so I can write it down. Right, this is where it's going to really be very interesting because you have to write down. Right. So now, looking at this market, this is our lower low. Right. Okay, let's use this. It's our lower low, and that's our lower high. All right, let me make that maybe red. Let's not really bright. Let's make it. Let's increase the opacity. All right. Now we have the lower low. Why is this a lower low? I want to explain. This is a lower low because this low is lower than what this low. So this lower low because this low actually went below this. That is why it's a lower low, lower than the previous low. All right, that's a lower low. Now looking at this market now, here is our lower high. You can see that this is your lower high. Why? Because it is actually a point, right? Now the mistake that many traders make is that they will call this a lower high and then see this as a break of structure. Be like, okay, lower high, and this is what many traders do. They be like the lower high, and be like, okay, break of structure, right? And then they'll try to buy this, right? And then they'll have, okay, other block, you can put their buy entry somewhere around there, right? And then they'll be like break of structure, and then the market things out. Even if you try, okay, it's okay, break of structure, maybe it's okay. Some of them are very small. Okay, this is liquidity. So we try to buy it because we saw this break. That is not correct, right? Now, the also are here to connect the dots. This is not a break of structure. Never has been and never will be a break of structure, right? So let's label this correctly. This is your lower high. Lower high is the highest point the price got to before making what a lower low. This lower high because it's the highest point the price got to before what making a new lower low. So now the new lower low is what this point here, right? This is your lower low. And where is our let's do that. Now where is our next lower high? This point. Now, know something. When the market is bearish, the market should not take out the previous lower high. So what we have here is what we refer to as what? A break of structure. So market should not take out the last lower high, right? And close above it. Now notice, a break of structure occurs when price closes above the last lower high, not a week. If the market does this and it closes above the last lower high, then that is a break of structure. But if it's just a week, it could be a liquidation. And also the time frame matters. So the higher time frame close above a previous lower high is more significant than the 5 minutes close above a previous lower high. So just because price close above a lower high does not mean that we have a break of structure. We must look at the time frame and other things, right? So now this is your break of structure, right? And then what happened next? The market did what? It made what? A new low. So as markets made a new low, this break of structure that becomes what? Invalid. Because if the market is really broken, it should not start buying, right? So this now becomes an invalid break of structure. And there's no way to know this before. Sometimes prices. So this now becomes an invalid break of structure. And then this is no more a lower high. Cannot delete that. And now, sorry, I'll do that. So this is no more a lower high. So cannot delete that. Sorry, I'll take out that red one. Right. So that's not no more a lower high. This now becomes what? A lower high. Because it's what? The lower high is always the highest point before price made was a new low. Right. So you cannot see this as what? A liquidity sweep. So that is this now becomes what? A liquidity sweep. Because market still was continue being what bearish. So this is how I delete all this. So this is not significant anymore. This is how you map out the market structure. So now this now becomes invalid because price did not respect this one. So now our structure now looks like this. We now have what? We now have what? Our lower high, lower low, lower high, lower low, lower high, and then lower low. Right, follow me. Now where's our next lower high? Remember I told you the highest point that price got to. This is not a break of structure because this did not make a new low. Right, so this is our lower high, and that's our lower low. Right now. So now, this is how you map out market structure in the correct way. This is the exact way you map out market structure correctly. All right, this is the correct way you map out market structure. Right, it is always changing. Lower high is not always set in stone. Right, like this scenario we had there, where the market took at the last lower high and continued bearish. That is means this whole break of structure because of an invalid break. Right, a valid break should see price make a new higher high. What do I mean? That means if the break of structure is valid, the market should do what? Should continue in that reversal move. So the market is bearish now, and the market should break structure. The market should now start doing what? Bullish, right? But if the market refuses to continue being bullish, this is now what we call an invalid break of structure. And now we cannot call this as what? Cannot call this what? A liquidation. And this is because of a liquidation for price to do that. So this happens a lot. This is how the market actually books. So don't always be so scared when you see the market. I'm not expecting your break. You have to consider the time frame you're looking at, right? You have to consider the time frame and all that. So what goes up is what comes down. So if you can reverse this is also the same thing for a bullish market, right? So we have what? So we have what? This is the arrow. So we have what? Our lower high. Sorry. We have our lower high. So our higher low, and then our higher high. Let us do this properly. Right. Let's do second. Let's not remember to share this video with your friends. Share this video with your friends so that they can also benefit from this free discount. Share this video with your friends. Just click on the link or copy the link and share it with your friends. All right. Just make sure you share this video with your friends. It's very important so they can also learn from this free bootcamp. It's free of charge. All you're doing, the only payment that requires is that you share the link and get a notepad to write and jot. All right. Take screenshots. Put it in your private journal. So let us mark this one again. So the same thing happens there. We have what? So a higher high, so a higher low, and so a higher high. Right. This is the lowest point before price was made a new high. Now what happened? The market was went to play the last low. Okay, that's what a break of structure, right? That's a break of structure. Now I want to see what happens next. If the market respected this continued dropping down, that would have been what a valid break of structure. But now the market it went above that high, continue was the trend. So now you cannot delay this. This is no more a break of structure. This is now what an invalid break of structure. It's no more what valid because the market has gone above, right? So this now becomes invalidated. So now what's our new structure? We're gonna have what? The higher low and then higher high. So all this now becomes what? A liquidation. Note that. Now this now all this now becomes what? A liquidation. So when I say okay, liquidity sweep, right? Liquidity sweep or equation. So and typically the market keeps the equation, market typically usually comes back there, but I'm not here to teach about institutional candles yet. That will be as we progress. Mostly price comes to mitigate this. But let us continue with what we're teaching. So what do we have here? We have what a new higher low and then what a higher high. This is how the market books. This is exactly how the market books, right? So now we're going to now we have understood this. Now let us talk about when is a break of how can you anticipate an invalid break of structure and how we can anticipate a valid break of structure, right? So this is where we're going to go to the next lesson in this still day one, right? All right, so let's continue. So in the first lesson on this day one, we talk about how to connect the dots in market structure. So now I want to also continue further with joining the dots. Right, so I've connected the dots, now I want to join it. After connecting the dots, we have to what? Join the dots. All right, so now when is a break of structure valid? When is it not valid? Right. So now this is how to anticipate if a break of structure is valid. Right now, the first way you can identify a valid break of structure is by checking if the market meets gated an area of interest. So now, when the market is bearish, and then you see what a break of structure, always note where that break occurred. Now, if this break occurred at a kind of unmitigated zone, like maybe you had what an imbalance here or an order block here, most likely this is what a liquidation. This is how you can anticipate an invalid break. So the market should break structure and come to hit maybe an imbalance, an order block, a breaker block, or a higher time frame support or resistance level, right? That might be what a liquidation for price to do what to push what downwards. So I usually catch this kind of trades very well. So now this is usually sponsored when you can see some kind of PUI below. Maybe you see some kind of imbalance down or some kind of liquidity down or some kind of yeah, a kind of imbalance or liquidity below this low. So I can look at this as what a sell above what the previous high, targeting what the next low. Understand that. And whenever market breaks structure, look at where the break of structure took place. Did it happen and tap into an imbalance? Did it tap into another block? And is there opposing liquidity or an opposing draw on liquidity? Is there a draw on liquidity in form of an imbalance or an other block below what the break of structure? Right? If there's an imbalance here, most like a price will do what we hit this zone and then drop lower. Right? So not every break of structure is a break of structure. Right? Some of break of structures are just what liquidations. Right? You have to put that at the back of your mind. Not every break of structure is a valid break of structure. Some of them are what liquidations. Right. So this is one of the ways you can able to know. Now, the second way you can know if a break of structure is valid, is going to be valid is what you can wait for what it does we call a double market break. So what do I mean? I mean, so what I mean by the double market break, let's take this out. So now, what I mean by double market break simply means that when the market breaks, right, you can wait the market to give another break. I mean, when the market breaks, you can wait the market to give what a second break. Now, when I give the second break, this is more what a confirmation for what this buy. So now I have what a double break. Why? This is the first break and then the second break. So now this is more of what a confirmation. The market wants to go bullish. So now I have what a double market break. So double market break is usually what a confirmation for what for bullish price action. So you can trust a double market break than just only a single break. Right. So market breaks like 2 times in the direction, that is more of a confirmation for what a bigger reversal, right? Remember to share this video with your friends and like it. Anywhere you have a question, do it to comment in the group so that comment in the channel comment section so that I can be able to review it and then answer your question as we continue this 30 days journey. All right. So now this is the break. We have what our liquidation, we have our double break, and then you can anticipate that price will come back what to here and then give what a blood a this and then candle. Now this is the second way you can actually know if the market is going to hold in the bullish or bearish break. Now the third way you can know is that you wait for what a lower time frame confirmation. This is another way you can know if the market is going to break, if it's going to continue, if it's going to hold, right? So the market comes after the market breaks for the first time, right? Remember, the first one you look at for what imbalance, where the market is breaking from the imbalance of liquidity, and is there opposing liquidity? That's the first way. The second one is look for what a double market break, and the third way is to wait for what a lower time frame confirmation. So the market is what comes and then gives what that lower time frame confirmation. This is what it tells us the market wants to buy. So you can always wait for what a lower time frame confirmation. So these are the three ways you can know if a BOS is going to be valid. Number one, you check where it's breaking from. Number two, you check if there is actually what a double market break. And number three, you have to wait for what a lower time frame confirmation. So once you get this lower time frame confirmation, then you do what you're good to go. Right? Right? This is one of the easiest way you can know if you break the double. Now, the fourth way, which I also use to know if a break is going to hold, this is the fourth way now, is to look for what a presence of an imbalance. So when the market breaks structure, I like to look for what the presence of an imbalance inside my pool. That means inside there, like inside this zone here, I want to see some kind of imbalance here, telling me that the market has not mitigated it. So the market is maybe properly balanced. I would not really trust that. So I would like to see what imbalance is formed inside this area I'm looking to buy. So imbalance makes it more valid, or an untapped order block, or untapped meet, or untapped, don't worry, so consumer, talk about mitigation. So an untapped or unmitigated area makes it what a high probability area to look out for what confirmations. All right. So these are the four ways you can know if a break is going to be valid or not. And yeah, obviously you can also look at what other elements such as time and price, the time of the day, sessions. I'll talk about that and continue about using sessions. That is very, very complex. But for this, I'm going to start from the beginning. That is crash. This is just the structural reasons, right? Now we're going to liquidity. We're not going to sessions yet. As we continue to talk about sessions, we'll talk about liquidity. So everything is just building up on vision. So this is building up on the next topic, and also will be building up on the next topic, right? So this is where I want you guys to go to your chart and study these things, right? So we're going to go into the real life examples tomorrow, right? For today, just replay this video at least 2 times, right? Make sure you watch this video 2 times because you might not get everything in the first watch. So make sure you watch this video 2 times, share it with your friends, type any question you have in the comments section, anything that makes sense to you. If you learn something new, something that you really enjoyed in this particular teaching, just do what the topic, type it in the comments section. Okay, I learned this, I didn't know that before, and all that. That's going to encourage you to keep making these videos until you complete this 30 days amazing teaching, right? So see you guys tomorrow in our next teaching. Have a wonderful evening. Cheers and God bless.